Welcome back, everyone. Tom Grisapi, Ag Bull Media, Ag Bull Trading. You're listening to the Ag Bull Podcast. We have the one and only Mr. Jim Wiesemeyer waiting, but I want to tell you, it has been an absolute joy and pleasure to do this show with Jim and all the new listeners, viewers, everyone. Thanks for joining. Don't forget to click like and subscribe. Check out our website. Now, with that, I thought we had an easy show. And then Mr. Wiesemeyer sent me his list, and he's going to get a lump of coal. But as President Trump told that young child, coal is a good thing now in your stocking. I hear Jim laughing in the background. Let's play the video of Mr. Wiesemeyer and let's have a good show. This is our last one of the year. We'll be back in 2026 and get things going. So many things to talk about. I'm really excited about this one. Mr. Wiesemeyer.
You know, President Trump actually said it had to be clean coal.
So did he say that? I tell you what, this guy that keeps giving.
Yeah, we've got a program that's going to look at, I guess, 2 baker's dozens of issues, but we're only going to bottom line 1 or 2 sentences, and that's it, because many listeners are well aware because they lived it, but we're going to go through of how the ag sector was enveloped by far more than the ag sector, Tommy: economic, trade, energy, geopolitics, food, you name it.
Yeah, I want to pop in here real quick. I'm here, everybody, but it's just me and Jim hitting the buttons. You're going to see a lot of Mr. Wiesemeyer and not a lot of me, and that's why you came here. Jim, I'm going to read something off. We're going to do year in review. Stock market, how'd it do?
Well, you had S&P up almost 20%, 18%. Across the board, we had more than a few records, and that shows you that Wall Street really had a good year. Now, what we have to do is to get Main Street in 2026 to go along.
Yeah, absolutely. Okay, the bond market?
They were a little nervous because we still have bonds, over 4%?
Yeah, 4.20, 4.15. That's on several rate cuts.
Yeah, the vigilantes are nervous, Tommy. They're nervous about sticky inflation. They're worried about the independence of the Fed, et cetera. And I think this dynamic will play out, especially the first few months of 2026.
And why would interest rates on bonds being going up? Well, let's talk about gold, silver, platinum, palladium, copper.
Tommy, you're the expert on the metals. Go to it.
Well, all I could say is this. I've traded my whole life, and I've almost never seen anything like we witnessed Friday in silver. What happened was pretty much unprecedented. Silver was up $5 an ounce after having an incredible run. Silver's up 175% on the year. But intraday, the CME Group announced on Friday that they are raising margins again. To put it in perspective, to take home a silver futures contract, you only needed $20,000 in your account of margin. One silver futures contract moved $35,000. If you came in long the day before and sold it at the 4 o'clock close, which we settle at 12:25 about, $35,000 move on a product, you only need $20,000. This is not going to end well. As far as gold and everything else, Jim, gold was only up 1% on Friday, which is only, right? Gold's only up $50 an ounce. Platinum, palladium, most of us don't even know what those metals are, except for if you've ever had a catalytic converter stolen, you kind of learn about that. All the other base metals, the truth is, Jim, and you know it, you're a smart man, China holds the key to so many metals. I did some Googling about Google. That's funny. I did some Googling about silver, and it comes from a lot of places, but a lot of silver comes from China. And China has a new rule starting January 1st. They're not going to let exports of silver. A lot of silver comes from Mexico. Did you know that, Jim?
Yes, I did. And tell them what Elon Musk said about the price of silver and how that could translate into sticky inflation.
Yeah, early this morning, this is Saturday recording, Elon Musk tweeted, spot silver hit $80. It's hitting 85 in China. He said, this is not good. This is a major industrial metal. Now there's this new battery being developed that is just pure silver in the battery. And it's obviously, if silver doubled in the last month and a half, it's going to make a $2,500 battery a $5,000 battery. And this is becoming a real problem. Something I've had silver my whole life. It's been one of the worst investments of my life until about 2 weeks ago. And
The dog
yeah,
barks. The dog
yeah.
barks.
All right. Grains and
And
cattle.
usually, Tommy, metals don't rally to the degree they did when you have record equity markets. But boy, they did them in tandem this year, so that was an aberration as well.
Yeah, yeah. You're freezing up a little bit on the recording, but you're fine. We're not going to stop. I just make sure you don't have any other apps or anything. I know Mr. Wiesemeyer probably has 20 things going on his computer at once. I'll go full screen on me. Okay, grain market and cattle market. They see me, but you can gladly talk us through this, Mr. Wiesemeyer.
Okay. Oh, well, we had corn. You had strong global demand and record large acreage and crops, but that record corn exports really helped. But if I would have told you at the beginning of the year we would have record acreage, record production, you would have thought we would have had even lower prices than we did. So that strong global demand, especially for U.S. corn, helped out. It could have been worse, is what I just said. Soybeans, China. They were lower, and they were pressured by large South American crops, especially Brazil, narrowing U.S. export share. So we're going to watch China focus going into 2026. Wheat, yeah, really the world supplies, elevated supplies globally, lifted those stock levels, Tommy, and tempered prices. U.S. wheat production and ending stocks grew, and that kept prices soft. Cotton, it was all China, lack thereof. They declined from the earlier highs in 2025 and into the low 60s areas. Cotton is hurting. We need cotton in the 85 to 90 cent area. Rice, U.S. rice supplies were somewhat reduced on smaller yields in the U.S., but global rice stocks also tightened. So, but they still were ample. But rice had basically a steady environment. Milo, sorghum. China. They were weighed down by lower Chinese imports and trade uncertainty. They picked up of late, but overall weak demand. Cattle, I'll let you talk cattle, Tommy.
Well, Jim, you give me all the easy ones. What can you say about cattle? The fundamentals said there was a bullish story, and it didn't disappoint. Now we had a bullish story, and then we started on these tariffs. We got into a beef, no pun intended, with Brazil, Canada, everyone else. Then we had screwworm, which you and I will talk about on this show. So we had extremely bullish fundamentals, and then we had what you hear the term so often, too often used, a black swan type event, right? And the hits just keep coming. Then we have this massive pullback, and not all markets go up forever. I will tell my silver friends, look at a cattle chart. They had the most bullish fundamentals at the very top, just like silver's doing now. No, nothing lasts forever, Jim, but it's come halfway back here from that big sell-off. So I think we got all the major commodities here.
Hog prices, they've tempered of late. We had a pretty good run up throughout 2025, but that hogs and pigs report and the revisions, Tommy, showed we had more hog inventory than the market expected. So we've got hogs on their back heels. And dairy, milk production forecast are steady, slightly lower projected cow inventories in the year ahead, and mixed price signals in the dairy. That kind of is the ag market
One
right
more
there.
sugar, because we had my friends up in North Dakota, they're really hurting from growing sugar this year.
Hundreds of acres, hundreds of dollars per acre of losses, depending where you are at in the sugar sector, and that's where one of the issues that we'll talk about, GLP-1, those weight reduction drugs have not helped the sugar industry.
Let's get in the lightning round. We have a lot of subjects. We won't waste any time. Trade war fallout. U.S.-China ag flows hit fresh lows. Soybeans stayed the pressure point. Trump Z reach a deal. Mr. Wiesemeyer.
Yeah, in a nutshell, the trade war for the U.S. and China is now in a truce, Tommy. It's a result of a agreement between President Trump and Chinese leader Xi Jinping. We had all sorts of disagreements in the ag trade as far as whether China would purchase the stated levels of U.S. soybeans. We're not going to detail those, but it looks like they're on a marketing year basis. They have purchased anywhere from 6 to 8 million tons so far this marketing year, but it's going to be one that we have to make sure that China fulfills the agreement, and that's going to unfold as we go through 2026. Okay.
Yes, sir. Trump's trade policy, the tariff state, what it means for agriculture, and the looming Supreme Court test.
Yeah, tariff is Trump's favorite word. He always says it. Uh, we've got hundreds of billions of dollars in tariff funding as a result of Trump's trade policy. But as you said, the Supreme Court of the United States is going to rule on the constitutionality of Trump's use of emergency factors in order to implement his trade policy. Now, if they rule against him, it could be a complex ruling. So we're not going to judge until we get that ruling, Tom. But once we get it, we'll dissect that ruling, because there are other tools in the White House's toolbox in order to still implement Trump's trade policy. It's just more cumbersome.
Here we go. Large crops, low prices, margin compression for growers.
We went through it, and farmers and ranchers, especially row crop producers, lived it. We had record or near record yields despite some major disease problems in corn, rust, etc., and soybeans, sudden death soybeans. But this whole region of the United States can flex their muscles. It's hard to kill a corn crop. That's what it told me again.
Mm-hmm. Farm financial stress triggers major government support.
Yeah, $12 billion worth, and 11 billions for row crop, 1 billion for specialty crops. Farmers are not complaining, except they don't think it'll be nearly enough. No program should ever make a farmer whole, but this will only cover 25 to 30% of those losses, the economic losses, not just trade. This is far more than just trade losses, Tommy. And that means that sometime in 2026, it looks like Congress is going to at least make an attempt to have further aid. But that farm financial stress, multiple years of low to very low prices, has now caught up with us. And for other perspective, since COVID days, we are up around 30% or so on inflation.
Wow.
The increase in the reference prices, which is our next one, foreign policy shifts. If you recall, in the One Big Beautiful Bill, OB3 as we call it now in Washington, that increased reference prices 10 to 20%. So you can see that factor there in foreign policy, that it's still behind the 8 ball. So we need some further focus on foreign policy in the years ahead. So we can just go right into number 6, livestock cycle tightens beef markets. Again, we explained it in the market commentary. Although President Trump doesn't understand the cattle cycle because he wants lower prices, it's going to take a while. It'll take well into 2026, if not 2027, to get this herd rebuilding. And we could have very firm prices unless Washington continues to try to get the government to stop these high meat prices. And I'm not going to rule that out, Tommy. I still hear in private talks that they're looking into other options. So that's something to watch as well.
Jim, I'm going to mute your microphone. You go ahead and get a beverage, and I'll pop up the screen. We got to, Mr. Wiesmeyer's going to go through a big list, so we got to get him a chance to drink a little something, clear his throat. All right, we did farm policy shifts, big boost in reference prices. I think he talked about that. Livestock. Next would be Trump orders DOJ and USDA review of U.S. meatpacking industry. That's a hot topic here. Mr. Wiesmeyer, you're back on.
Well, when you're in a problem area called food inflation, if you don't know how to solve it, you study it. And that's what they're doing with the Department of Justice and USDA review of U.S. meatpacking industry. They're also going to add on the other input industries and seed, fertilizer, and farm machinery. Usually these investigations don't bring about anything new, Tommy. We'll have to see what they come up with.
Trump remarks on Argentina deal rattle U.S. livestock and soybean producers.
Oh my goodness! Here once we had a good rally going in soybeans. What did Treasury Secretary Scott Bessent do? Along with White House blessing, they offered Argentina a $20 billion bond swap, and the very next day, Argentina eliminates their export taxes, and China comes in and buys billions of dollars worth of Argentine soybeans right during the time slot, Tommy, that we're normally competitive, relatively competitive to U.S. Brazilian soybeans. And as far as the livestock sector, Trump quadrupled the quota of Argentine beef coming in. It affected the markets big time initially, but as we said, the overall demand and other fundamentals in cattle brought prices roaring back.
Unbelievable. Tyson restructures beef operations amid tight cattle supplies.
Yeah, we were on the air live when this story broke, and you helped break it, Tommy. And but this shows you the implications of what's happening in the U.S. cattle industry. And the Department of Justice and USDA better look into this, because these are the industry ramifications. It's not all hunky-dory in the cattle industry. They're having some rough times. We saw that eventual closing of the plant in Nebraska, the reduction to one shift in the Amarillo, Texas plant, and who knows, we could see some other beef industry ramifications. And again, this just shows the follow through on the downside of input prices, lack of cattle, etc. So this is the market working, actually.
This ties right into it. New World Screw Room, border risks the livestock debate.
Oh yeah, they better have their act together. And we let's see if we're going to be accurate, but I guess it was last week when we detailed one option, but it'll be a phased in reopening, and we're going to hear this in January. I fully expect it, but they're going to be very cautious. They meaning USDA. You're going to be very cautious and do a multiple series of tests, Tommy, on these cattle perhaps coming back in from certain areas of Mexico. But I think USDA would be taking the right approach. Very science-based, very cautious, a lot of testing. We're going to see how it unfolds.
What that'll do is create a huge headline, Jim, that the Mexican border's open, but then you'll realize it's like trying to get into Disneyland while President Trump's there. You're going to have to go through security, through security, through security, and the actual number of cattle that'll come over will be so limited, correct?
I agree. That's why, headline. If you don't know the story, the headline, it's a buying opportunity if you're in cattle and they go down when this happens. But I totally agree with your analysis there. Next one.
Animal health shocks continued with bird flu spread.
Bird flu is just not poultry, is what we learned. It's spread to other species. And the administration still toys with a rather big increase in vaccines. Should they do it? The trade, the sectors are split on this one because it has trade policy implications when you use vaccines, Tommy. Some people don't want to trade with the countries anymore if they use a bird flu vaccine. This is just a lingering issue every year for the last few years. It's not going to go away.
Sticky food inflation becomes a political flashpoint. Sticky food. I've been hearing this word sticky a lot. Do tell.
Lingering, when you're eating um, uh, what was it, a candied apple, as I'd say, it leaves residue. It leaves residue. And the Democrats have picked up on this and the affordability issue that we'll mention several times in this program. And when we look at 2026, the meat issue has already vexed the White House, and there's limited things they can do. Egg prices, they did handle relatively well. They had a 5-point plan to help reduce egg prices, and that succeeded. But some of these things on food prices are lingering, and that's where you get the sticky side. So I think agriculture is going to remain in the news and be used in the election year 2026 as far as a topic that needs to be addressed, Tommy.
SNAP battle intensifies as food affordability and farm policy collide.
You saw food stamps become important in a number of times in 2025. In the one big beautiful bill where the Republicans were successful in reducing expenditures and doing some what many people believe to be needed reforms. The Democrats didn't like that. That's why you didn't have one Democrat vote for that bill. It's carried over into farm policy debates under the so-called skinny farm bill or Farm Bill 2.0, where the Democrats want to claw back some of those funds that were cut. They're not going to get it. And you also had tighter eligibility rules announced by USDA Secretary Brooke Rollins that have been controversial among certain states. The food stamps cover about, food and nutrition covers almost 85% of our all farm bill spending. And that's where you have the divided issue now in agriculture, where some people are saying maybe we have to delink that farm bill in the future from the food and nutrition debate. We're going to see. No right answer there, by the way.
What was the last one we did?
The food stamps were 14
SNAP?
weight loss drugs.
Okay, so you talked that long about SNAP. Okay, I thought I skipped one. Here we go.
Weight loss drugs, GLP-1, that's reshaping food demand, sugar and other products, snacks, processed foods, sugar-heavy items, and alcoholic beverages. You have some whiskey producers in Kentucky shutting down production, Tommy. We have some major things going on in the food arena. Now, at least one company has FDA approval for these drugs in a pill format where you don't have to take an injection. And another a company, Eli Lilly, will do the same thing later in 2026. So this is going to accelerate the impact of those weight reducing GLP-1 drugs. Now, it's not all negative for agriculture. You need protein when you take these drugs, and that increases protein, meaning meats. So it's not all bad. Plus, it looks like early analysis shows this is just not weight reduction. It helps in heart issues, etc. So I think you're going to see more than a few Americans take it, especially when it comes out in pill format.
MAHA in agriculture, health, politics, meat, farm policy. That's probably why it's popping up this guy's picture. MAHA.
Yeah, make America healthy again, MAHA. Agriculture dodged a bullet in the second MAHA Commission report, in which they were relatively lenient on the use of pesticides after being worried about it for ever since MAHA started. I think the future, though, is going to be on one key subject: ultra-processed foods. We already saw a legal case in San Francisco in which a number of entities sued food companies for allowing the sale of ultra-processed foods that were seen as detrimental to children. So you're going to see a lot more of that. MAHA will have another commission report in 2026. Look for it, Tommy. It'll define, truly define from a government's perspective, what we mean by ultra processed foods.
USDA reorganization fuels delivery concerns.
Yeah, the so-called 5 hubs, very unpopular, at least in Washington. Depends on the farmer or rancher that you talk to. Now, in theory, when you move a lot of parts of USDA from DC to the interior, you're moving them closer to the constituency, farmers and ranchers and rural people. But USDA has done a horrible job of defining what they want to do. So I think this is still mostly getting negative reviews until USDA educates the American public, but they haven't done so far yet.
And when we talk USDA, we're talking about Brooke Rounds. Now, I'll add a little color to this. Didn't you put out an article that we lost like 15 or 20,000 of the 100,000 jobs at the USDA?
Yes,
Yeah.
that? Well, that was when we had, remember in the early days this year when we had the Doge Commission, Elon Musk, things like that. They didn't succeed very well. It shows you that Congress is the only institution that can really cut cost. And we all know that we have a dysfunctional Congress. But as far as USDA, a lot of employees, including those at the Farm Service Agency, took the opportunity for this multi-month severance, if you will, and quit their jobs, and that hurt. And the other aspects of the Doge Commission, not all, but a lot of them, the way they handled it was really not very government employee friendly. And USDA was one of the biggest agencies who lost people. So we've had a lot of brain drain at USDA, but we're really feeling it at the Farm Service Agency offices.
Wow. Farm input costs, the year central economic squeeze.
Yeah, fertilizer again. But farmers know what's happening to fertilizer. They didn't go down as much as people thought they would. Seed cost, machinery repair pressures. I mean, that's when you go out and give speeches like we do, Tommy. You hear the farm machinery repair cost issue. And this is why the Department of Justice and USDA signed a memorandum to examine the rising farm input cost. But it is what it is, and I don't think they're going to do much about it. But I'll leave it to the conclusions to see what the DOJ and USDA come up with. But we're into this cost price squeeze where the prices are relatively low for row crops, but the farm input costs are high, and there is your squeeze. And when this goes on multiple years, you have a problem. Farm machinery, you had John Deere in their earnings call acknowledge that their large equipment sales to both in the U.S. and Canada are going to be down 15 to 20%. So again, much like the meatpacking industry that is feeling the negativities of lack of cattle, the farm machinery companies are feeling the impact of low prices across the board for row crops. And farmers increasingly are not buying new equipment. That's why your used equipment is so popular.
We're getting into the metals round. RFS and biofuel policy uncertainty reigns.
Yeah, we're still waiting and waiting and waiting for, and this for the renewable fuel standard mandate, what they call them RVOs, for 2026 and 2027. We're still waiting for what I would say allied issues relative to the renewable fuel standard program for how they're going to handle the reallocation of the SREs for refineries. We're going to see some RIN market developments, etc. And all that's waiting until probably late in the first quarter of 2026. Now, this is where the government shutdown. Remember the 43-day record government shutdown not so long ago. This impacted the RFS and biofuel policy big time. It just delayed the decision making. I think EPA should have kept more people on board, and USDA should have as well. I think they took a mean-spirited approach in the administration, as far as I'm concerned, of how they handled the government shutdown when it came to personnel that they wanted to remain in the place. EPA didn't have the people to make decisions, so that's why these programs are delayed.
Year-end E15 legislative push continues.
Sooner or later, we're going to get year-round E15. It's always better to get it codified from Congress. President Trump may do it executive-wise, but I've seen a pattern now with the Trump administration relative to biofuels policy. Again, RFS, sustainable aviation fuel, etc. Much like Trump's first administration, they want to please everybody. And that's why you're having where nobody likes it, Tommy. And I think that that's delaying some of the things because they're trying to reach a goal that's impossible to reach. You can't please everybody. You have to. There are always winners and losers in policy issues. Again, as far as year-round E15, if we're going to get it, it'll be in a must-pass spending bill sometime in the month of this coming January. But we have a number of oil state lawmakers who pulled it back about this time last year when we thought we had it. So we're going to see. As far as California, they did approve for the first time for California the use of E15, let alone year-round E15. And although the U.S. biofuel lobbyists thought, oh, this is really going to happen quickly, they're wrong. They don't understand California's regulatory process called CARB. I'll just leave it there. It's going to take well into 2026 before we see appreciable use of E15 in a big gasoline usage state of California, even though they have a love affair with battery-operated cars.
45Z clean fuel production credit reshapes economics.
Another issue, same delay. We have waited and waited and waited for the Treasury Department, i.e. the Internal Revenue Service, to detail the regulations, the tax incentives for the 45Z clean fuel production credit. It's big time importance for soybeans, biodiesel, renewable diesel, and corn to see whether or not it's eligible and at what level, Tommy. And let's connect dots here. If we're having some issues in the exports of some U.S. farm products, that means your domestic utilization has to increase. And that's going to become increasingly important, not just for 2026, but in the years ahead, especially for soybeans. Because you can talk China all you want. You can't count on China for years and years and years ahead. So you have to get the second gear, and that's domestic utilization. This is the area, 45Z, Renewable Fuel Standard Program, etc., that have to kick in order to give U.S. demand a better balance sheet for the years ahead. And that's where we're seeing the next one, biofuel import dynamics shifted, because in the OB3 bill, the one big beautiful bill, you had changing dynamics when it came to what international biofuel was eligible for different biofuel programs in the United States. And you can see that in the soybean balance sheet, where soybean oil had a good year.
So that was biofuel import dynamic shift. Next,
absolutely.
How are we going to ship all this stuff? The railroads.
We have a big one. They filed Union Pacific and Norfolk Southern wants to merge. Now, that'll create the true first coast-to-coast freight railroad in the United States. Now, there's pros and cons all over the place, including in agriculture on that. Those two entities, UP and NS, they filed 7,000 pages into the Surface Transportation Board, Tommy. What's that mean? They tried to justify it and all the steps. I think they made some good cases, but it's going to take 2026 and probably 2027 before we get a final Surface Transportation Board decision. But all your listeners and affected stakeholders in this, make your views known because they're taking public comments.
Unbelievable times here. All right, the railroads. Let's get back to rural health cost and the Affordable Care Act become an ag state flashpoint. Everyone is complaining about healthcare costs.
Yes, that's it. This is Obamacare, another word for Affordable Care Act, which is really unaffordable Care Act. Now, the Democrats, when they were in charge of everything in Washington and in the COVID days under Biden administration, they dramatically increased the tax credits for Obamacare, but they only put a 2-year time frame on them, and that's running out very soon. But now the Democrats want at least a year, if not a 3-year extension of those, and they're going to use it in the 2026 elections because a lot of farmers, by the way, Tommy, get the Affordable Care Act program because especially if the spouse does not work off farm, a lot of spouses work off farm in order to get health care insurance. So this is a rural issue as well. I think that sometime in the month of January, before the end of January, because that's the next countdown to shutdown. God forbid, I hope we don't have another government shutdown. But I think that some type of political compromise is going to be had because the Republicans know they're going to be blamed for this dramatic run-up. We're going to see the details come out within the next few weeks.
H2A changes and the push for year-round ag labor reform.
We've got the border secure, and I mean it is secure now. But now that usually raises the question, well, what about the labor reform issues, especially ag labor reform? We have some congressional initiatives underway. House Ag Committee Chairman G.T. Thompson has a bill for year-round, migrant labor. That'll help definitely the dairy industry, if not other ag sectors. But this is a controversial issue within the Trump administration because you have Stephen Miller, chief domestic policy advisor to Trump. He doesn't want to give very much on any visa changes, whether it's H2A, which is the guest worker program for the agriculture, or H1B, more for the ag and tech, for the tech sector. In the U.S. Bottom line, what I just said, I hope there's compromise, but this is a third rail issue in Congress, especially as we go into an election year. Don't hold your breath that we're going to see anything.
Here we go. WOTUS reset regulatory retreat after years of conflict.
This is a plus on the Environmental Protection Agency. We had what we call a WOTUS reset. It's been a long running battle, and after the Supreme Court's Sackett decision, what EPA did in the Army Corps of Engineers, they dramatically narrowed federal authority over wetlands and ephemeral waters. But now this is not all positive, because what they did is, although there's fewer federal jurisdiction and they reduce the enforcement risk, the state role has expanded. So the producers out there are going to have to watch their state legislatures and their state officials of how they're going to regulate water. So, and a number of states, especially Minnesota, they could be right back into the WOTUS soup, depending on how these states regulate it. So, step in the right direction, but they moved it to the state level from the federal arena.
OB3 tax cuts, incentive reshape farm and agribusiness planning.
Well, this is the EPA deregulation push, number 27, Tom. Proposal to rescind the climate endangerment finding. Well, what does that mean? That was what the Biden administration, when they were in, used to justify all their climate programs. Actually, the endangerment finding, I'll correct myself, was adopted during the Obama administration, carried over by the Biden administration. Now, their EPA now is wanting to do away with that, to rescind it, and it's going to be thrown into courts. But this lessens the justification for climate-related legislation in the future if it holds up for legal testing. So that'll be, as we go through 2026, there'll be court challenges. Last one, Tommy.
Yes, sir. Let's
We're
hit
there. We're OB3 tax cuts and incentives have reshaped farm and agribusiness planning and overall U.S. businesses. Now, this is a political issue now. The Democrats say this is top heavy for the top 10% of income people, which of course agriculture is in, by the way, in most cases. But they're saying this additional refunds that more than a few Americans are going to get in 2026 will be segmented to certain sectors of the American populace. The most positive thing I can say for agriculture, which I think it is, it makes some programs permanent, enhance expensing and depreciation, business tax relief, the estate and succession implications, where now it's permanent. We don't have to worry about the future. So they remove some major tax cliffs for agriculture in that area. The 20% Section 199A pass-through deduction was locked in now, etc. Bottom line, if you're optimistic that the U.S. economy is going to roar ahead in 2026. Now, we had an initial signal of that with the much higher than expected GDP, gross domestic product, for the third quarter. If you're into that camp where we're going to see 4% or higher, 4 to 5% in the next few quarters, this is what you point to for 2026 of how when it's implemented, some of these provisions that not just agribusiness, but overall U.S. businesses are going to hire more. They're going to come out with more entrepreneurial products, et cetera. That's the most positive spin I can put on this, but it's something to watch, Tommy.
You put this one in there, the marijuana reclassification.
Oh, I did put that in because I get a few emails on that. Marijuana was reclassified from Schedule 1 to Schedule 3. Now that means a major economic shift for the cannabis sector. It'll be challenged in court again, but it has meaningful impacts on agriculture, tax policy, and rural economies. Now, this is not, we don't have really marijuana farmers. We have businesses on that. And they tried to close what we call the hemp loophole, but the Senate and the House are split on this issues, and that's still up in the air. So cannabis operators can now deduct costs for labor, inputs, equipment, utilities, and rent. Now that's dramatically improving the after-tax profitability of that sector, Tommy.
Wild times. Excuse me.
We just went through it. So what does this all mean?
Yeah.
This, what we just went through shows that policy decisions often matter in agriculture as much as weather and yields. I hate to say that. I wish it wasn't, but it's true. So that means that we have a clear defining lesson of this past year. The ag sector is no longer just cyclical. It's structural, political, increasingly influenced by decisions far beyond the farm gate, with lasting implications for producers, consumers, and policymakers, which is going to lead into whether or not we have to fundamentally change farm policy, given the fundamental structural challenges that we've gone through. Is it time to rethink our farm and food policy? And it's time to start investing major resources to create new demand opportunities beyond just exports. And that brings us back full circle to domestic utilization. And that's going to be the key issue that we're going to help monitor in 2026, Tommy.
Well said, my friend. I will see you next year. you did the ultimate lightning round there, and I am pretty optimistic that commodity markets are going to be popping. This move in metals has my head shaking, and there's going to be a big reaction. But what are you most optimistic about coming into 2026? I'll let you finish.
U.S. economy. I think what we saw in the third quarter was a clear and distinct signal, assuming we don't have another shutdown of the government after January 30th. And I think the economy has a lot of upside momentum, and that'll be good overall for America.
Well said. Thank you, Jim.
Sure.